morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Thank you, Stephen, and thanks, everyone. How about a Bookmap Discord? Thank you, KC. Good to get a response. Thank you. Well, good morning, everyone. Welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and this stream is the Trader Lab. The Trader Lab's a group of traders who have come together in an open forum or chat. There's no cost, no subscription to be part of this streaming environment and trader environment. It is a group of traders, and the objective of the Trader Lab is to build a business of trading, not a trade calling room. It's really about helping traders understand how the market works, why it does what it does, and how to integrate a high-tier order flow tool like Bookmap into the equation. The key to trading, in my opinion, is understanding how the market works. It isn't about your indicators, which are outputs of price-based behaviors or derivatives. It really is about market mechanics, how you might get in alignment with the market, and then having structured trades that are vetted, which means having a statistical edge, so that when you do interact with the market participants, you're not gambling, but you're playing statistics, because the environment we operate in, whether you accept it or not, is a random environment. What makes it random? The other participant behavior. The market's made up of a lot of different participants that operate in different time frames with different agendas, and subject to who participates at any moment can disrupt your trade, and you take a stop. Now, is that predictive? No, absolutely. But it is statistical. So if you can change your mindset, if you will, from your beliefs, from working towards predicting what's going to happen, and maybe substituting the probability of something happening, it changes the direction you take in the business. The business model that we align with is casinos or gaming theory. Just think how a casino operates. You'll understand how they extract the dollars from the gamblers. The cards are random, and the way the gamblers play the cards is random, just like our environment. But the casinos only play games in that random environment and extract the dollars because they play games that have a statistical edge. They don't know the outcome of the next hand. Same way we cannot know the outcome of the next trade. So the goal, at least for the Trader Lab and the traders who are just like you in the Trader Lab, is to take our experiences, what we've learned, and remove what does not work and creates inconsistency, which cannot be measured, and substitute it with anchored inputs. I did a webinar that's available to everyone in the Bookmap Discord TraderLab community. And remember, there's no cost to be part of this community. It's called a primer webinar, and it goes into anchoring inputs and understanding the business side of trading. If you're interested in the business of trading, I invite you all to visit the Trader Lab. And of course, you have to vet these structured trades. There's 60 PDFs of those, reverse engineer them, and put together a plan for yourself. Let's take care of business. And I also have let you know, and Stephen, if you could post in a Discord, our Discord chat in the Trader Lab, and also in YouTube, we have a special event coming up on Thursday that you're absolutely not going to want to miss. And it is open to everyone. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, And please remember, this is not a trade calling room. This is based on structured trades that are available to everyone in the Bookmap Discord TraderLab community. Let's see if I can get this working for you. Now, this is our special event that's coming up, and I want you guys to take notice. This is with Axia Futures, and you can register with it for it, and there's a link going to be placed in the Bookmap Discord TraderLab community. Stephen, if you help me out with that, and also in YouTube. And of course, there's no cost to visit this. But what is it all about? Why is it important that you should watch this and participate in this? It's a special workshop on how to place your stops, trading strategies, and how to stay in your trades longer. And I think we'd all like to do that, right? How to use Bookmap to identify high liquidity zones and how you might use that for stop placement and trade management, and how to avoid premature exits from your trades. I think this might be one of the most important webinars that you might want to watch. So this is what it's going to look like. Stephen, I can't see if you've posted those yet. Please do. Those should be available to post. Now, let's move forward if we can here. I've got to show you this morning prior to RTH Open. Now, I typically don't have time for this in the stream because unfortunately my time is limited. Previously, I did streams up to 4.5, 5 hours long of real-time narration. Those are available in the library, in the Bookmap Discord TraderLab, as well as a full grouping of trader webinars and streams I've done in different behaviors and contexts. I don't call trades because it's a waste of your time. You know, I'm not here to entertain you. I'm here to help you see different ways to look at the market. The other part is there's not one way to do this. But the key of it is if you have, and here's something really important, if you have random inputs, you're a gambler. Why? They're not anchored. How do you measure something that is variable? So maybe the thing to do, let's see if I got this. Okay. The thing to do is to eliminate randomness and have anchored inputs. And this is really what TraderLab is about, helping you understand where is an edge and how do you get one. Okay. Here we go. I'm going to try to drag something over and hopefully it doesn't blow up. You know how it is with these things. So this was posted at 7:40 this morning. Now, this is what TraderLab is about. You know, just to give you an idea. Market is in balance. The overnight volume point of control, and I'll be showing you these in Bookmap, it was above us. That saying is where the high volume was in the ETH at the time. Remember, this is as of, before 8 a.m. It was too high. 55.05 is our target below. Stops are resting under the past 2 days lows, right? The naked volume point of control is above us, I believe, balance from above. So we are looking at potentially two-sided trade today. We had a neutral day yesterday, which suggests consolidation today and potentially a breakout lower. And of course, who knows, right? We are below settlement. Market has been building lower value over the last 3 days. Let me show you what that looks like. Let's look at the higher time frame if I can find it here. And I hope you get something out of this. Here, I posted this. Now, observe here. I'm going to try to blow this up. This is market profile. You guys have heard of that. I learned it from Peter Stottlemyre in mid-1980s. He actually created it. He was over at CBOT. This is what is important. If you remember, and now this is yesterday, day before yesterday. This was our target to sell day before yesterday. It's right near the high of the day. That was a short. I narrated that in the stream. Now, this 55.52 was a target coming up today. If we came up, Yesterday, 55.22 was the retail price. But here's what I want to show you. These areas where you see the volume, there's something called the volume point of control right here. That's where the highest volume is. And what the market tends to do is it rotates and builds something called value. And what the whole purpose of the market is to try to figure out, what is this thing worth? And that's always a great question, isn't it? Well, this was the retail price. We opened below it. I should say we opened higher, and then we sold off. And this was a separation of valuation. So in other words, oh, this is too high, I'm not paying it, and the market rotates. So what you're seeing is the market is making lower valuations because most of the volume is what, and the reason valuation is really where most volume takes place. Think of it like shopping. In your store, where most volume takes place is like the retail price. Well, as we get too high, there's less buying above it. You see how the volume tapers? And when we come out too low at the time, the volume tapers. This is like in your store. If the price is too high, you go, I'm not paying that. Somebody pays it, but not a lot because it's overpriced, right? If it goes on sale, the sellers don't leave it down here. If the buyers are activated, they're going to bring it back to retail. So this process takes place. What we're seeing is lower value, lower value, lower value, lower value. And in spite of the rotations, what are we seeing? Lower value. So what does that set up for us? We have yesterday's low, we have the previous day's low, and our targets below us for today, if we break out and there's sell stops under here, which is why shorts only for me with a few exceptions. This is our targeting for today. Just want you to know, lay of the land prior to the market opens, and like everything, clueless. And don't forget this. And Stephen, did you get a chance to post a link for that, please? I don't see a link. Guys, I'm trying to find a way to do that. Let me try to get this out of here and get back to things. One moment. Trying to fix trouble in River City here. All right, am I still doing okay in Discord, guys? Yeah, Dan, would you please post it in Discord and the YouTube? Guys, if this is important, you definitely want to watch this. And if you can't watch it live, definitely watch it somewhere in your travels. I think we all want to operate better when it comes to managing our trades. It's one of the things I've always been dissatisfied with. And part of that is psychological. It's not practical because we don't, it's kind of mentally we want it all. That's the lunatic that resides in our brain, and that's Hyde. Hyde wants it all. But in trading, we can't get it all because we don't know where the bottom of anything is, But maybe there's ways to actually do it a little bit better. This is the RTH Open. Let's go take a look at what we got. This is yesterday's high volume price. That is like retail. We have the ETH low and the RTH open. What does that suggest? This is our first target. So we're opening lower under settlement. Settlement's way above us inside of yesterday's range. So let's look at some statistics. Overnight low has about a 66% probability of getting taken out. Past performance not indicative of future results. We're opening here. Now, this does present a little challenge. This is retail from yesterday. This is the overnight volume point of control, retail from the ETH. We are accepting at the moment this pricing at the moment. Now, this is the RTH open. It's very important. So if you just notice, I suggested for today, two-sided trade. And the priority of input for me was to sell is shorts. So for the most part, I've been only on the short side, and I've only seen one long trade, which I'll talk about. At least that fits my plan. Doesn't mean it's not your plan. The thing about TraderLab is to understand what is the right way to trade. When I get that question, I'm going to say, can you measure it? Does it have an edge? And if I get, I don't know, then you're a gambler. And I don't mean to offend anybody, but I am here to maybe give you a little shake if you want to be in the business. Because this isn't a video game. We're in business. And if you want to have a career in trading, you got to treat it like a business. That means you can't do what the others are doing. And the casinos certainly don't change blackjack because they're bored, or they don't just invent a new game because they've been sitting here for 2 hours without a structured trade to take and they need action. Gee, I'm wasting my time. Are you an hourly worker or going to be a professional trader? Do professional athletes take random shots at the basket if we're talking basketball, or do they have organized plays or setups or structured plays? We're in this business, guys. You want to be in the trading business, you need to, in my opinion, change how you look at it. Now, let's look at this here. Right here, around 24, 25, this area is an outside edge in the ETH. And what this represents, let's look at ETH, is this is the high volume. So retail, remember, everybody's willing to do business here. If we come outside, what's too high? Well, right. Absorption buyers, volume 120. Right here in the ETH is an outside edge. So what that says is retail, and remember how this might work. If the price gets too high, the volume tapers off and you got less buyers. If I don't get past here, I'm going to rotate here and potentially come out the bottom, which is our first. We're looking to trade shorts, maybe, subject to your plan. Now I'm going to take you, and by the way, if you have questions, post them in YouTube. There's a bit of a delay. Thanks, Stephen, for posting that. And thank you, Dan and Stephen. Stephen, throw a quarter in the slot for that PC. Okay, first trades, structured trades, and you have to vet these for yourself. Remember, this is the business of trading, and this is the Bookmap Discord TraderLab community. What it's about is building the business of trading. And how do you do that? You start with structured trades. What's a structured trade? A planned trade. And they're based on market mechanics. I've shared 60 PDFs of these, and these are trades that I developed. Well, I've been trading going on 45 years, so I would say a while ago. And they've been beaten into a pulp. And I will say, like most of you, I did the same things you did. I just have done it longer, and I probably had more time to do more than you guys. Most of the things that are in the retail space, I've done. And a lot of them, when they were new. I shared an office with George Lane. He created stochastics. So when I first saw oscillators, I thought, finally, I found the Holy Grail. And then there was Wells Wilder, RSI. We didn't have volume. We didn't have domes. When I first started trading, was classical bar charting. Just saying. Doesn't matter. But all it means is I've gone down the yellow brick road, just like you. The difference is probably I'm not doing those things anymore because I've had enough time to spend years trying to get things to, quote, fit. And in the end, they didn't. Why did I spend all that time, you're going to ask? Because it's random and everything works. If you can't, and if you're using random inputs, you can't measure it. This is a variable high volume node. Now remember, two things. If you look at the ETH, it's sold off. I have my low volume node outside, which was too high, and the market is heavily short. This is retail. What can happen here? Well, what's too high? So there's a couple possibilities. I jump out the window, get my statistics below, overnight low, and fall out and go to 55.05, my target, which would be sweet. Or I get early selling, and those shorts who sell early and the sellers who are sitting short in the ETH get squeezed. That's already in the plan. That's already in the TraderLab. That is where we start. So, variable high volume node. Market opens. I get a rotation. I see sellers here. I see liquidity in the book. Now I'm using order flow and market mechanics to attempt underlying to get in alignment. My first objective is to try to get outside. Wow. Brain. And there's something else I posted in the TraderLab I didn't mention to you. We had what was called a neutral day yesterday, and all that means is the first hour high and low were taken out. That suggests to us two-sided trade yesterday, and what it means. Let's talk about what things mean. It means, and this is part of the post I showed you at the top of the stream, it's two-sided trade. The market's in balance. That means it's kind of what you call it used to be called the Mexican standoff. All it means is the market is now kind of neutral. That's why it's called a neutral day, and it's this equilibrium of two-sided participation. It creates compression, and it creates a huge consolidation with stops on both sides. That's why if you come out of one side or the other side, relative to yesterday's high or low, you're going to get the squeeze. We're looking for it to come out of yesterday's low only because those two lows, yesterday's low and the previous low a day, have sell stops under them, and that was close. Now, if it doesn't do that, the shorts can get squeezed out going the other way. The buy, up top. And here's another statistic, and you have to vet these, and I'll get rolling right away here. Typically, or often, I have to use the word often, there's nothing typical in trading, neutral days come in bunches, because it's a consolidation or a fight between two sides. They typically, or again, often, I don't want to say typically, don't resolve themselves immediately. So there's almost a 30% probability that we'll get the same behavior following yesterday. And we can break out today, or we could break out tomorrow if we don't break out today. So it's setting up a compression of a fight between two sides. By the way, my next target, 39.50, I'm just noticing, and yesterday's high I see is right up here. So this is what a neutral day looks like. Anyway, no way to know that. So anyway, this is too high. Watch, too low. So I'm going like this, and I want to get short, but I have a problem. This is the retail price in the ETH, and this is the retail from yesterday. I cannot get anything going here. I need it to come outside so I can come back and go for the overnight low. So this is the first trade I'm looking at. Let's look at it. Absorption sellers volume 125. Sorry guys, I got distracted here. So what you have here is the market comes out right here. I see no buyers here. I'm seeing my seller here. This is a micro consolidation. Now, the thing about this is an aggressive trade. And subject to your trade plan, this might not be appropriate for you. I have to say that because there are some things we do that might... Boy, that's loud. There are some things we do that may or may not be appropriate. This is trade plan specific. I always suggest in TraderLab, this is the ideal or the better location to be selling from. This is where I want to sell. But I have a high level statistic, and I think we might fall out. And my target's 55.05. So I'm just letting you know, I took a short here. This is my first target. So scale. So I got scaled, and I was feeling pretty good about it. I said, well, this is nice. I got this one, right? Ever say that? Now what? I come down here, and I see the buyer here, and I'm starting to utter words not of wisdom, just words. And I see now this is where I want to stay below, because I can come back to this, and if it's too high, this area actually right here, you see where we come? And I need it to come down and take this out if this trade's going to work. I come above here. This is really the last stand, you know. ES is the last stand, and I'm out. Taken out. Okay? So I got a scratch, and by the time the dust settles, I got not even, I think I got a burger, you know. So we come outside. Where do we come? Here, which was my preferred location. I put the trade back out again. I scale here, and again, I'm looking for it to fall out the bottom and go south of the border. Notice this. Let me show you this microstructure. I'm going to draw something for you. Now, this is called mean reversion. And the joke, of course, in the TraderLab is, yeah, it's mean. Let's look at where the volume is. It's right there, and there's the location. And this, I pointed out to you at the top of the stream. It's the low volume that was in from the ETH, which was up in here, right? There, 24, 25, right? No precision, horseshoes, hand grenades. So there's my buyers. They are absorbed. There's no buyer here. Chop, chop, break low, break. Now I shorted it here, but let me show you another entry. Because I always, and this is called mean reversion, and we do stress the term mean. So I'm going to put a line over here, because and right here, and you could also put it here. Let me just show you how you might do this while you're trying to train your brain to recognize these things. So I'm going to put one there and one here. So this is our area of volume, okay? And the high volume node was right there, and you could see the delta. This is where volume was going off, and chances are it was the selling iceberg. I don't want to go into it too much. So you have buy stops, and you have your buying, which is the stops, and the selling iceberg interacting. That's what is represented here. Here we see order flow, the limit order book. I want you to see the components, and you get the reaction. So anyway, I got short here, not important. Here's what's important. Let's watch. If you're playing mean reversion in the TraderLab, 2 entries. If you have some experience, this is it right here. And you would see, you would recognize this. This takes time. Or more conservative, this. See it? So, absorption, nada, who knows? Sellers take over. You see the difference in the behavior. Where's my sellers? Buyers. Going to the moon, Alice. Not necessarily. Sellers. Now what? This is too high. They are absorbed. I'm making a point. This is how you use Bookmap. And this is now the auction. So I'm putting together components. This is my short. To where? Back either here, mean reversion, that's the mean, and then fall out the bottom is the objective. Where does it come back? Back here. Huh. Is this magic? No, it's auction. Here's something else. It's random. So what do you have? Short, short, short. Then what? Trade's over. I don't have a problem with these because that's my trade plan. Would I have liked it to do something different than this? Absolutely. What does this do now for me? I go into park and I'm going, okay, we have gotten above this level. What does that set up? Up. Buyers are now taking control. Now, it doesn't mean I don't get short. It does suggest now the buyers are in control. Now, let's watch. I'm trying to think where I had my next short. Look where we come. Now, this is not, I'm just going to have to say, this is different trading. This is more advanced, and this is not, this is trading in fractals. It's another concept. It's advanced. I'm not going to talk about it much here. I'm going to show you something. But here's the thing. Let's remember what happened, in this, okay? What do you see here? Buyers, liquidity in the book. This is all advanced. I'm only going to show you how fractals operate. There's your high volume. And this is a trade that is not a structured trade. It is a derivative or advanced process. This is what's important. I'm just going to point it out. But you can learn this in TraderLab. But guys, this may take you a year before you are able to trade this to there. See? And it's just a scalp to me. I'm not suggesting anybody does it. Look, the range is only 4 or 5 points. You may or may not choose to trade this. But I want you to see behavior. See the seller? Where's the volume? This is a little different behavior. It's in the PDFs. I have this as resistance. I have this as resistance. I have my retracement here. This different part of the plan back to here. And then it could come back here or not. So this is your scale. This is an advanced process. I'm just sharing. Now, 9 a.m., we have something called the IB30, which was here, I believe. So the high at 9 a.m., and we had a report at 9 a.m. I think it was new home sales. Glad to hear those new homes are selling. Right here. The theory, statistically, of the IB30 is if we take out the first half hour's high, there is a good probability we will take out the first hour's high. So I am aware of that now. Here's the other thing. This is the target coming up for the long side, 55.30-ish. And in the intermediate time frame, not to make you nutty, but we are trading in fractals, this is retail. If we come up and check this and it's too high, we can come back here. Let me give you a little sense of what I'm talking about. And guys, if you find this confusing, which you probably will, don't be concerned about confusion. Clarity comes from understanding. And understanding takes time, and it takes commitment and study and coming to TraderLab if you find this process interesting, and of course, maybe even give you an edge with it. What is this down here? Let's come back to this. This was my retail price from yesterday. My overnight volume point of control, I think, was right around here someplace, which was the retail price from the ETH. If it becomes too low and I leave it, I can then come to another high volume area in a higher time frame. Think Russian dolls. You know how a Russian doll is, big one, then you go down, 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 down. So this is just a higher time frame version of this. So I can anticipate that the market comes back, and this is like going to your big box store where they do huge volume. And this was the retail price. If this is too high, I can come back here. Now, I don't know. So let's see. So right here is a potential short. Let's take a look, or not. So what do I see here? Let's just look. Liquidity in the book. Buy stops coming up. Selling iceberg. Stop sweep. And this is a potential short. Let's just look at it together. And I'm using the term potential. We want to see behavior. By the way, there is no precision. It's horseshoes. And I have another target, by the way. I think I got to bring this up to you guys. This is a statistical target. This is a statistical target. Yesterday's settlement, the overnight mid. Value area high. Let me give you some stats on this. Value area is the outside edge where 70% of the volume took place. and then it tapers. This is yesterday. I'm going to give you these stats. Past performance, not indicative of future results. 83% probability we get to the overnight mid. Oh. Trying to look for the previous settlement. Sorry, guys. 72% probability we get there. So I know I've got stats. And the value area high, about a 60% probability. So these have higher probabilities than this one. So, and this is my target, remember? So I'm looking at this area for a short. Now, how do we do that? Let's look. Now, this may not be part of your trade plan, okay? I'm looking in this area for a short. How might I do that? Let's try to see if there's anything we can see in here. Well, I've got this. So I've got this. I've got buyers here. I've got my buyers. Now I'm looking. Actually was looking for this. Okay. So this is my target. So if I was long, which I wasn't, this would be my target. I would just take my trade out here and forget about it. I come up higher. I'm now looking for this and this. I mean, this is the statistics. I work with stats. But what do I see here? I see buyers. They run out of gas. Buyers try again. Right here, I'm seeing potential absorption. Here's what it looks like in the delta. I got a little seller right here. That's probably this iceberg. Hey, here's a little something for you. Take that. Now, the buyers are here. High volume is there. I'm going to mark it. Now, here's what's important to understand. If this is not your trade, you got no trade. You just are sitting here working on your crochet. Now, I don't know. Right here, I have no clue. I just want you to know I am the clueless. Not ignorant, but certainly clueless. And if you have questions, please post them. I cannot see the chat right now, but I will come up for oxygen. I want to show you this short. So it's a suspect. There's my seller. Now remember, I had a seller here and I saw absorption. When I see this and I see nothing and I see this in the book, I have to be thinking, how far are we going to go? I see a seller here. Where's my seller? If I break high, absorbed, these guys are now under the proverbial bus. Okay, so I come up, now you see the buyer. So I'm putting the pieces together and I'm at a location and I have this and I don't know. I don't know. So let's watch. Sellers take over here. So now I know I have the possibility of a short to mean revert from out here. Does this look familiar? Now remember, the way in mean reversion trading, and this is just my plan, I can't have no opinion on if it's good, bad, or indifferent. It's just the way to slice and dice the market. Now I'm going to come up and see if you have questions, please post them. And I will be coming up for oxygen and I'm going to take a rest. Notice the high volume here. Notice the micro high volume structure there. Notice this is our target, and notice these are targets. And notice that Tom has no idea because he accepts he doesn't know. But what he does know is that something happened here. And there was that change in behavior. And we got back to the mid. Now, a couple things can happen. By the way, this is called VPOC migration. VPOC migration. This right here is what's retail, where most of the volume is. So I am seeing this. Too high, too low, too high. Most of the volume is taking place here. If I get short, I am coming back here. Where's the stops? VWAP and mid. Where do I scale? Either here, here, or here. This is a short. Let's go back and look. Too high. Where do I come up here? I come up and there's my buyer. Here's my seller again. These are shorts in the TraderLab. If it fits for you, you know. And where's support over here? It was here at this LVN. And then, so I'm looking now for it to come down and take out the longs. Notice where we go. So, short down to here. And then I'm looking for it to break, which it did. And I'm going, come on, Seabiscuit, you know. And then it's trade management. So that was a short. And what am I looking for? Come out here. That's the last trade I had. Because then I got a stream. But I'm going to show you the next trades after this. Okay. Questions now before we talk about a long. And thanks for your patience. And don't forget, guys, we have that free Axia Traders Workshop. And there's a link in YouTube. You'll see Demo Trader. There's a link. It says it's by Axia Futures. You definitely don't want to miss it. It's about trade management, stops, how to stay in your trades longer, how to use Bookmap, where to hide your stop, and a guide to avoid premature exits. Wouldn't we all like to get as much as we can out of our open trade equity? So if you haven't seen this, register for it. There's a link in YouTube, and there is a link in the Bookmap Discord TraderLab community, which, by the way, is a no-cost community. It's available to all of you to visit the TraderLab, download 60 PDFs of these structured trades that I'm sharing with you here in the stream, so you can reverse engineer them and understand and build out the business of trading. By the way, this is a business. And remember, now, let's talk about the long. Now, right here, now I'm done. And for me, there's two possibilities right here. So my trade is over, and then I stream, so that was the end of it for me. Not so bad, you know. A little, by the way, mean reversion, two-sided. And remember, there's a 30% probability we have another neutral day. This is all posted before the open. Now, the joy of trading is, who knows? Can't predict it. I gave up, and I spent too many years trying to have certainty where it doesn't exist. Trying to create a craft setups and trade processes that predicted what was going to happen. Now, it seems subtle, doesn't it, that let's predict, let's use indicators, let's load them on to create more certainty so we can be right. Of course we want to be right. But the fact of the matter is we cannot predict which trade works, which trade takes a full stop, which trade gets a scale, which trade goes on to target, and our trade management process, what we need to do on each individual trade, because they're all unique. So then the thing to do is treat them all the same in the sense of when they show up, yet they're individuals. It's almost like having children, and they're all a little different, right? So each structured trade is unique in its own way and has to be approached and is only qualified under certain conditions. Most retail traders are trying to fit the market in a box and treat them all the same. This is not the same condition. This is different. So we're looking for this to come out and fall out the bottom. And remember what my targets are. That get under here, and this is where I'm trying to go. This is my target. Lovely. Anyway, no way to know. So right here, I see absorption. And again, what I do is once I get my risk is off, I scale out, then it's what I call the Hail Mary pass. Why did it stop here? Well, in hindsight, we know that these sellers got absorbed, okay? But there's no way to know. At least if there is, come to TraderLab, let me know, because I haven't figured out how to predict anything. I just trail. I see the sellers. Now here, I see buyers come in, and I'm going, well, all right, and I come above the IB. Now, right here, there's two possibilities, and we have structured trades for this in TraderLab. One is we come up to here. Watch. The volume is going down. I have this. Now, this is low volume right here. This is the first hour's low. It's called the IB low. And this is called range extension. If we come out under here, we're taking the longs out from this morning, and the market is now short. Remember that. Write this down. The market goes up to go down. The market goes down to go up. And I see so right here, no clue. I want to know. I have no idea. What do I know? This is too high, microstructure. This is this is a consolidation right here. In other words, chop, 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 micro. You can see the volume. I'm now down in the, remember, Russian dolls. I'm in the little doll. This is a consolidation. This is a consolidation. This is how I'm managing my trade, and I'm completely clueless. There's the high volume. You notice, watch what I do here. Seller, too high. This is the little store. This is your midget Russian doll or your little store down the street, 8 o'clock Sunday night before the movie. I got to buy a pint of ice cream. And you want how much for that? All right, I'll pay it. Not a lot of shoppers here. So that's a consolidation. Too high, too low, too high, too low. Volume, I'm not paying that. I leave. Over here, too high, too low, too high, too low, too high, too low. Volume, I'm not paying that. I leave. Micro here. Out of here. Here, volume. Too high. Watch. Down here, volume. Here. I'm looking for it to continue. Watch. Micro, high volume. Now, here's the thing you got to decide with the trade plan. Where are you managing this trade? Are you back here? And you're giving it some room to breathe for a rotation? That's trade plan specific. So let's watch. Let's look at the profile over here. This is taking all the volume. This is isolating only what's here. Now, they're really the same thing. This is just more micro. It's in there. But I'm only looking really at this over here. And this is all of it. So they do have a different look, but similar. So the high volume node is here. And you can see the same thing here because that's all that's auctioned down here. Okay? Up here, it looks different, but that's okay. I'm just showing you how you use Bookmap for this. And this is showing me the delta. So what I'm seeing is sellers. This little buyer came in here. Hey, thanks for playing. Send you a gift basket. Sellers, 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 sellers. Where's my buyers? I don't see them. Now, let's look at change. What happens here? Let's look. Right down here, this liquidity is passive in the book. I have absorption there. That means there were sellers, but somebody was buying them. I have absorption here in the limit order book. Buying iceberg here, very subtle. And it doesn't matter if the market goes below this. It can. The thing about it that's important is what happens if we come back above it. And this is in those PDFs you can download in the TraderLab. This is market or order flow phenomena. Now, it doesn't mean that the market's going to go up from here. Why didn't it go up? See, let's look at the same thing. Absorption here. Is this the low? Oh, I don't know. Maybe. But what do I see? Absorption, buyer. Here, I had a seller. I had a buyer here. The buyers, are they going to win the little fight here? Well, what's this? We're under here. Sellers take over. What about over here? Not so much. What about this buyer here? Sellers are underneath. They failed. Going down here. Seller is here. Buyer is here. How are we doing on this one? Not so much. How about here? Seller. Watch. Buying iceberg. Liquidity. How do I know? How about you can't? Watch. Sellers try here. This right here. The sellers took a shot here. They failed. Interesting, isn't it? Now my buyers are here. My sellers are here. Let's watch a little further. This is my first hour low. I have a trade developing here, and there's two possibilities, and this is the joy. Either it's a short here, well, not actually here, but maybe here. So in this area for continuation lower, or if I can't get my sellers, then I'm going to squeeze these guys out and mean revert. Remember, and there's no way to know, this is part of your joy. So let's look. Notice where we come, outside edge of this distribution. So you have two possibilities here, right here, and here's your liquidity. Let's watch. Remember, buyers failed here, and buyers failed here. Liquidity comes in the book right here. So I'm looking at this. I'm not looking at it because I'm already getting ready for the stream. So I didn't really have time to concentrate on it. But let's look at it because there's two structured trades here, a short and a long. And you're going to say, well, that's nice. Sure, Tom, it can go up or down. Yes, but what's important here? If the market is either going to continue down, or if not, if you were sitting short, what would you do? And what else do we know? Yesterday was a neutral day. We could not take out the previous day's low. What about today? We could not take out yesterday's low. What is going on here? Oh, and this. What does this do to the book? Forgot to mention that. Skews it. Pressure. Tide is maybe coming in right here. All of this confluence. I'm spending time because this is how order flow might give you an edge over other traders that are just looking at a candle. What's going on inside is what counts. Not, 5 minutes went by and I got a body with a little wick. What happened here? So this is right here. If we're going to go down, it's going to do it from here. And it's going to come out. So we're going to watch now. Watch. So I'm ready. Not able to trade it, remember? But this is where it's either north or south. And I got this. This is setting off the alarm bell. If this wasn't here, I'd be looking at this, you see, because there'd be nothing here. But there's something going on in the book. Screenshots, TraderLab. Screenshots. What happens? Sellers are here. Sellers are here. You see the absorption? The buyers are buying here. The sellers are selling here. That's the absorption. This comes in the book. Watch. This is so important. Now, nobody can predict, or somebody can, but I haven't met them yet. We only know what might happen. If I'm seeing sellers and I'm not getting down here, and now this is my volume, and this is too low, I'm going to mark it. Now, I'm doing this in my head. In other words, you got to mark these things when you do screenshots because you have to develop, and I say have to, I suggest that you learn to develop unconscious competence. So when you see these things on a subconscious level, you're going to know what you're looking at. So that's too low. We don't know. Hey, suspect. What else do we know? High volume is here. Where's my low volume? It's here. If this thing's going south, it's going to do it from here. What does it do, you ask? Too low, next volume. Low volume outside, right? there. Is that too high? Break above it. Sellers were here. They got run over. This becomes a long in the TraderLab to here for a scale and then hold. Watch. Targeting. Where's the stops? Here. What happens here? I haven't seen any of this. I'm going to stop now because this sets up a couple of different scenarios right now. I had another target up here. Let me just look. I didn't put it on. Slipping. Yeah, 39.50, but that's yesterday's high, so that's okay. That's a target. Let's go back to our statistics. Remember, guys, what were our statistics? Settlement, overnight mid. What was our statistics for the settlement? 72% probability. Overnight mid, 83% probability. And yesterday was a neutral day, 30% probability that we take out the first hour's high after taking out the first hour's low. Who knows? And the stops above here, neutral day. Now I'm going to look at your questions. I hope this is useful, and I apologize for not looking up at your questions, but this is the TraderLab, and my time is really limited. So you can get all of this in the Bookmap Discord TraderLab community. It's a free, no-cost online community. It's made up of diverse group of traders. Senior trader has over 50 years of experience. I've got going on 45, both professionally and, of course, now sitting out here like you guys. The community brings everybody together. And there isn't a quote right way to trade. But I'm going to suggest there are a lot of ways to fail in trade. And the thing about it is, how can you differentiate from the tools or the processes that actually give you an opportunity to be in the business of trading and those that actually are self-sabotaging and limiting? Most of us cannot differentiate. And the problem is the randomness. Everything works at times. And we can spend our lives trying to fix something that's actually defective because it works at times. That's what happened to me. And I tried to fix that with trading systems. And I mean walk forward testing, all kinds of statistics, all computer-based, writing code and all that. And I did this many years ago because I was a fund manager. So, and I was trading a substantial amount of dough. And it was mostly trend following, and in the S&Ps, swing trading, the big ones, $500 a point. That'll give you indigestion. So, and this was in the early 1980s. I started trading 1980. I was managing money 84, 85, 86, up to 90. And then at 90, let's just say I changed what I was doing. I think it was somewhere 92, 93. And then retail. And in the TraderLab, there's a photo of me sitting in front of my CRT screen that was taken in 2000. And I did trade the dot-com crash. I exclusively traded. I was a high-volume trader years ago. And because of volatility in the NQ, you can do that if you can deal with it. But over time, what I've tried to do is not be scalpy because of the cost to trade and be more rotationally oriented. So you guys have questions. So by the way, this was our target, okay? Here is our liquidity, and I can't call trades, but this may be a short back to there. This could also be, let me see if we have a long from here. No, we did not. So now it wouldn't be a short, it's counter trend. But we might have a long setting up here, but for me, it's more of a short coming back here for the stop pick. Not a recommendation. Anyway, didn't quite see that exactly in time. Let's look at it. Liquidity in the book, stops. Now, if stops come out, which we anticipate, and there's no buying above it, what are we doing? This sets up a potential short to here, not a recommendation. This is really subject to how you view the market counter trend, right? I view the market a little differently. I trade in fractals. So for me, I am still going to trade. If the market is two-sided, I got my stops out, and where's my buyers above here? If I don't get buyers above here, then it was stops. So if my stops come out and I get no buying and I see my liquidity, I see my seller in my microstructure. Now this takes time. See the volume, see where it is. There's microstructure. By the way, guys, it's not for you to be thinking that you need to do this or should do it. The idea is to learn to recognize it. You don't have to try to enter here. It's very hard. You might be looking at entering in this, and your stop is going to go here, and you're going to try to come here. Why would you come here? First hour high. Where's the stops? Here and here. Where do day traders put their stops? Under swings. Well, I like to try to trade into the fuel. Well, what's the concept of getting into this for a targeting? The fuel. On another fractal, where's the fuel? And this is not I don't call trades. This trade could fold like all of them. You know, it doesn't matter. What you need to be thinking about, where's the high volume? It's right there. If I'm trading fractals, high volume to high volume node, this is like a little VPOC. So it is retail in this distribution. So this is the ice cream price, 8 o'clock Saturday night in this store. So too high, retail. If this is too low, we will come back and check too high. If it's not too low, so I can check it, bounce, or I can check it, do whatever. If I get below it, I'm coming here and the stops are here. This is a structured trade, and you have to be scaling here. Now in the TraderLab, here's the thing with fractal trading, which is rotational trading. If you can't enter with enough range to scale here, the trade is not qualified. Your job is not, I'm showing you auction mechanics here. Your job is not to put a trade on that doesn't have the requirements of range for risk neutral. Your job is to get in alignment, follow the auction, and to know what it says. Remember, the auction's the language of the market. I don't use any indicators. I can tell what this meant to the participants. It meant this was where in this consolidation, all this volume, chop, 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 is an auction. We broke out. What does the market do with breakout? Let's think about this. Comes back to the volume. That's why it's a scale. Then either we come back to this volume and fail, or get through and get the stops on the other side and then come under here. That's the trade. Let's see what it does. And by the way, I have no idea. But is it logical why, if you were to get short, why this is your scale? Now, look at this thing. You got to use a shoehorn. I should probably not call it the TraderLab. It should be shoehorn trading. This is the range. So here's the question for you. How do you trade this? Do you wait for a retracement? And yet this is your obstacle? Do you get short here and this is your obstacle and your stop is out here? Do you not take the trade? That's the question. For you, not for me. For you. Because the answer lies in your trade plan and statistics. Do you have an edge here? Let's see what it does. Questions?
Sweet S&P sellers 5,538.5.
Yeah, hi, sis doc. How are you? Yeah, you know what? This takes time to understand how the market works. Most of us are indicator oriented, and let's just put indicators in the place they belong. They're translators. That's all they are. The problem with an indicator, it can't differentiate the condition of the market or what's going on in the market. It just is price-based or derivative, okay? And then we use multiple time frames, and most of us looking for certainty, and that's our psychological. You see the behavior? I don't think our indicator will do that. At least I don't use them. And I'm not saying you can't use them. What I think most retail traders have issues with is not understanding how the market works. They have basically substituted an indicator as the translator. I do it the other way around. I translate the market. I don't, and because I can read the language, the indicators to me are just lagging, conflicting inputs. So I don't use them. And I want you to know, I used them. And then some. I created my own. And I went off in, I call it Twinkie land, you know. I spent years. And all the stuff most of you guys have done, at least for me, it was always inconsistent. So, and it wasn't measurable. Sure, you can look at your P&L, but the misleading issue with P&L is gamblers walk out with cash, but they don't have an edge. So you'll see something work and you'll keep working on it or doing whatever. Why is this a short? Now, it doesn't mean it's going to work. Why would I get short here? And why was this the location to come back and check? You see it? How can I do this? I'm not saying you should. I'm not even sure I should, except it has an edge. And if this is a business of edge, where's my stops? Where am I going to go? That's the target. And then you put your helmet on. Does that make sense? Are you getting something out of this, guys? This is TraderLab. Repeat, you're asking me why no long? I don't know. Maybe it is a good long here. Why would I not get long here? By the way, you got to follow your plan. You're asking me why not. I'm going to say, for you, it's your trade, your job's to take it. My trade is to sell it. Different. And by the way, in TraderLab, we've got traders long, we've got traders short, we've got traders who went to lunch. It's all the same. We have traders in TraderLab who will be long all day or short all day, and they both succeed, or they both don't for that day. So this is my short for all the reasons I've already indicated. Is this rational and logical? I don't know about rationality. It's probably the wrong question. Is it logical? Why I would be trading to this? And then we either bounce off here and keep going, or we're done in the high of the day, might underline be in. It's not my job to predict because I can't. I trade auction mechanics. Doesn't mean anything. But it's a way to organize an understanding of potential behavior. Then whatever happens, happens. So here's the possibilities. This short is over and it becomes a long. Or the short has hit its objective and now runners are at break even. You know, whatever. Now it's trade management. Let's look at the trade management. Too high, So you had this as an aggressive entry. This is the pullback. This is a short. This guy got thrown under the bus. Thanks for playing. This is the target, right? And what did we do? Let's look at the profile. See? So now there's two possibilities. Along here, which is not my trade, or a retracement, a test to here and here. So let's think about the logic of this. Outside edge, too high. I'm not paying that. Retail, outside edge. Oh, it's on sale. Let's come back and check the retail price in this distribution. Is this still too high? I don't know. Let's find out. Or is this too low? Right now it's too low. Is this too high? If I come up above here, then the trade is over. I pack up the station wagon and leave. Trade's done. No foul. Or I see this is TraderLab. Or I see the short. I wait for this, for another structured trade to get long, and I've got a scale here. So what I have is, look at the beauty of this. Too high, short. There was the retail. There is the outside edge. Then potential long or not, or exit or not, back to here. Too high, it's going to be resistance. Then these guys are going to go under the bus. Too low, then these guys are going to go under the bus. Do you know which it is? I'm going to tell you, I don't know. Here's what I know. I know that's an outside edge. I know this is an outside edge. I know this is my retail price. I know I found the outside here, and I know I got the outside there. I know if I don't get over this, then these guys are going to have a headache. If I do get over this, my short would have a headache, and all it would be is runners. So no matter what, the short would pay. If you take the long, this is your obstacle. Notice where we come. It's all right here. What happens? That, my friends, is random questions. This is TraderLab. Let me see. Yusuf, are you asking me if he gives me an edge? Yeah. If you come to TraderLab, and there's a link in the bottom of YouTube, you should ask them. How has this process, or I should say, this is a way to understand the market. The thing about the indicators is, because most of us all start, you get a toolbox, they give you 500 indicators. So have you thought why there maybe aren't only 4 or 5? Just a question. And retail traders go down the yellow brick road here of indicator bliss, thinking it's the right mix of indicators and time frames. Considering the failure rate of retail traders is over 90%, and you have to vet that, of course, for yourself. Why is that happening? I'm going to suggest because maybe those things don't work, or at least how retail traders try to deploy them doesn't work. Do you understand why this is a short? Do you understand why this is resistance? Can you say yes? If you can, you got something going for you. If you don't understand it, I'm going to suggest you come to TraderLab. Doesn't cost you anything. What does it cost you not to understand how the market works? That's a reasonable question. What does it cost you not understanding what happened here and why it was important? What does it cost you to know, not to know that this is an outside edge, and if we get under there, we're going to light up the longs now are offsides? And what does it, you see, and what was this? This was a short, remember? what does this become? Support. Not a long, support. So this trade could be done. Or, let me give you the or, just to keep you thinking, we're going to continue lower, or your trade is over. See, this is the thing about your trade plan, not mine, yours. Now what? So here's the next element here. So if you're short, you got to have a trade management plan. Here's what can happen here. I can come up here, and if I don't get above this, then continuation down. And I'll show you where it might go. Where's the stops? Where's the longs? Mid, VWAP, and VPOC. This is called mean reversion, underlining the word mean. This is the targeting. Doesn't have to ever do it. Doesn't matter. Market could care less about everything, and especially us. The market is random. The thing about the market is if you understand how it works, it may give you an edge over other traders who are, unfortunately, don't understand, who are merely trying to curve fit indicators to give them the answer and the certainty, which does not exist. If you think like a casino, you understand this is a statistically built business, not a predictive business. This is what the TraderLab is about. The business of trading. And we all have a fantasy when we come into this that all we got to do is find the right time frame and the right indicator mix, and now we have an ATM in the basement. That at best is naive. That's not to be offensive. I'm just saying is, anything you have probably done, I have already done, or derivatives of them. Doesn't matter what you find. If it's in the retail space, everybody's been there already, been there, done that. You get the big aha moment, everybody else has had the big aha moment, and then it has no edge. So I'm just saying, while you're looking for the Holy Grail, everything's been sifted through. So the thing becomes, what are retail traders doing? And they are failing. Should we do what they do, or should we take the experience of them and ourselves? Can we get a benefit from it? It's not about, and by the way, these are our next targets, right? So this is a short, this is real time. Remember, I don't call trades. If you're in TraderLab, this is your trade or not. You have to vet it. And where are we going? This, after we pick these guys off. Now, this is a scale also, because we can get mechanical retail buyers at the mid and the VWAP and get a rotation here, or blow their stops out and come here. So this is called mean reversion. And that's what balances two-sided trade. And that's what yesterday's was. And this morning, whatever it was, 7 a.m. or whatever it was, 8 a.m., this is what I posted. This is what TraderLab is. And nobody knows what's going to happen. So there's no secret sauce. But you know what there is? A community of traders that are leveraging their collective experience. And it doesn't cost you a dime to join the TraderLab and become part of a community. There's a million, or I don't know about a million, but there's so many, quote, streamers, experts, out on YouTube and Instagram and all of it. And I'm sure you guys have all kind of made the rounds. I suspect if you come to TraderLab, you're going to find something different. Certainly not the Holy Grail. But, and here's our potential behavior, right here. Absorption, sweep, buying iceberg. Watch the behavior. So we could get a rotation here. And then, and right here, I don't know what's going to happen, right? Because we have retail traders that are mechanical buyers, and we can get a rotation out of this thing. Let's watch it. In TraderLab, you know this. Then, and we're in a mean reversion. So this is not a place I get long. This is a place I want to trade to. And I know now, of course, there's stops under here. So the mechanical retail buyers, and you could see them right here, these shorts are being absorbed by the buyers. Now, how far out do we come? Well, don't know. Let's watch. And then where might we go? Here. If we get under here, back here, and maybe out the bottom or not, doesn't matter. Take it one piece at a time. Questions, guys?
Yes, short trade zone. Short trade zone.
Guys, you know, the whole thing about confidence in a trade, how do you get confidence? Have you ever thought about it? I'll tell you how I got confidence. First of all, early on, I was doing what you guys do. Some trades work, some trades don't. Well, why? Well, first of all, they're random, you know, so that's part of it. But then over time, I started, by the way, this is anticipated, you see? What we want to see now is what happens out here, outside edges. This is micro high volume right there. I am above it. I can come outside somewhere. Now, also, this thing can just go to the moon. That's possible also. So, what do? Well, this has been a pretty nice short, I think. What do you guys think? Now, right here, I have choices. Manage the runners, because this is my primary target after a counter rotation here. Why did I mention to you that we anticipated a rotation? Where does that understanding come from? It comes from buying the mid mechanically early on and understanding retail trader behavior. Write this down. Think like a retail trader. Don't act like one. Anticipate to participate. I anticipate buyers, and they might be right. I have no opinion except the condition of the market, which suggests I'm going here and maybe going to fall out, or not necessarily out the bottom, but maybe. And if it doesn't happen, my trade management just takes me out of the trade and I go to the next trade. That's it. Where does this trade fail? Above here. Oh, out here, or none of the above. Let's watch the behavior. This is TraderLab. Let's see what happens. And I may run out of time. I only got 7 minutes left. And if I do, apologies. But you can get more of this every day in the TraderLab. I post in the TraderLab. I do ad hoc audio snippets, psychological tidbits. And it's not just me. I'm only one piece. The leverage that's created by the participants in the TraderLab is second to none. Charts are posted, comments, debate. There's no one way to trade. You know, I often get asked, well, what's the right way to trade? It's a very simple answer. It's, can you measure it? Is it consistent? If you can measure it, you'll find that things you think work have no edge. You'll get rid of them, or you'll just continue to lose with them. That's your choice. But when you isolate what might have an edge, you'll be looking for it. Like this short. I don't know about you. I'm okay with that. How many points is that? You see? How many of these do you need a day? This is what I like to do. And this is what we like to do in TraderLab. Now, here's the other piece. This is trading in fractals. You could just take this rotation and be out of it. You see? It's all up to you. You could be done with this here. Now, it's up to you. We want to watch the outside edge here. I'm running out of time. Guys, remember there's a link in YouTube for the free Axia webinar. I suggest you guys all attend it. Also, remember, if you're interested in TraderLab, please give first of all, if you're in YouTube, how about a thumb up? We like the thumb up. Thumbs up supports the channel, lets me know you get benefit. Leave a comment. I always, like to do better. If you have ideas or things you'd like me to concentrate on, throw them in there. The thumb up, of course. There's a link in the bottom of YouTube if you want to visit TraderLab. There's no cost to be part of the TraderLab community. Bring what you do, because we all are looking to get better. We might learn from you as well as you learn from us. That's the goal of TraderLab. There's not one way to do this, but we've all done what you do, and there might be some things we might want to jettison if they don't work. Me and you. That's what TraderLab is. That's what it's built on. It's a community. And I suggest, if you guys are interested, that you visit TraderLab and see if you can derive something. There is a primer webinar in there. It's got about 29,000 views. You would start with that. And there's a library of webinars plus 60 PDFs of structured trades. If you haven't seen them, well, I'm not going to show them to you. They're in the TraderLab. You've all heard about them, right? They're all available to you, plus they're all the resources, the statistics, everything you see that I do here in the stream. And remember, these streams are available exclusively to Bookmap Discord TraderLab participants to reverse engineer, review, screenshot, dissect, and see what you can extract from it. Remember, absorption, location, retracement. Now, this right here, let me show you where this trade might go. It's out here. So this is, if it comes up here and can't get through here, it's another short for me, because then the longs in here go on the hook. If I squeeze out through here, then the short will be over, and I might just put it back on again. These are not trade recommendations, or be done with it. You see, it doesn't matter. It's just one trade. Please give a thumb up. Appreciate you visiting the TraderLab today. We're going to try to hang in here with you guys so you could see what happens over here. Let's look at this. This is our location of interest. Here's high volume right there. No buyers here. There's going to be potentially stops sitting over this area. And I want to see what happens here. Let's watch. We've only got 2 minutes. Don't forget the thumb up in YouTube. And don't forget the link in the bottom of YouTube, and to attend the special webinar on stops and trade management. That the link is posted in YouTube and the Bookmap Discord TraderLab. Stops are at an outside edge. So the way this would work, see this, how it reacted here? This is your high volume here. So that becomes too low. It's like a micro high volume. This is where our stops are, and the trade would fail out in here. Liquidity just came in the book. This is your volume here. There was your break. This is your test. This is resistance, and this is resistance. I have run out of time. This is when the chariot turns into a pumpkin. You guys remember that, don't you? So we're going to watch this area. You can watch it. These are not trade recommendations, now or never. This is auction market theory, market mechanics, how to get in alignment, and maybe how to manage your trades. And every trade is random. And this market, subject to what happens in here, can still go down, take out these guys, and go down to here and maybe lower. If not, then we can continue and squeeze out. And remember what was too high. It's this. So you got this area, this area. So this trade, you got to manage it, and you go from there. Thanks again, guys. Nice visiting with you today. Appreciate you stopping by the TraderLab. Look forward to seeing you guys tomorrow. Thumb up in YouTube on the way out. Remember, this stream's available exclusively to TraderLab participants to review, screenshot, reverse engineer, and extract as much as you can. Thanks, guys. Appreciate you visiting TraderLab today, and look forward to seeing you soon.